The ECB has already increased rates quite significantly. And one of the things that we are expecting is that indeed they will slow down that process. Well, actually, I think the more important thing is where will they get to? We reckon that they will probably get to what is generally accepted at the upper end of the range of the neutral rate of interest. And then we'll have to see. However, what I would also like to mention is that one of the things that the ECB has done over the past couple of years is a QE program, and in part that was designed to prevent a rerun of the European debt crisis, to prevent spreads from widening. And now the ECB is going to be in the reverse. So they're going to roll out a QT program to some degree. And I think they have to tread very carefully how they do that, because in contrast to most other central banks, it's not only about the level of interest rates, it's also about the level of spreads that's very important for the euro area. Well, there are a number of wildcards that are out there and that are difficult to quantify in terms of its probability. Obviously, the Ukrainian war is one of them. If that was to escalate, and at the time as we are recording, there was just the news coming out that one of the missiles hit Polish territory. So that's definitely something to watch out for. The strength of the global economy and potentially any kind of conflicts between other parts of the world, that's definitely something that exposes Europe, because Europe is a very open continent and is reliant on a healthy global economy. And then, of course, one of the other things that I would mention is political strife within the euro area itself or within the EU. We've seen how damaging Brexit, for instance, has been, and clearly that is not the case at the moment, but there are countries that are a bit at loggerheads. Hungary would be one. We've just elected a fairly right-wing government in Italy that currently is not antagonizing Brussels, but that might come. So the internal strife within Europe, that's also something that should be very closely monitored. So the most likely scenario for the European economy that we are seeing is that we're currently in a recession that's probably going to expand into the first quarter, potentially even the second quarter of next year. Now, the upshot and the silver lining is that this is probably going to coincide with the ECB stopping its rate hiking process. And this in turn also, of course, means that the global bond market rout that also was present in Europe is probably going to come to an end. And with that, we get a little bit of relief, both for asset markets, but also for the economy as a whole. And therefore, we think in the second half of the year, the picture is probably going to look up again, particularly if Europe keeps working on having its supply of oil and gas at the ready come the next winter.
This content is based on information available at the time it was recorded and is for informational purposes only. It is not an offer to buy or sell or a solicitation, and no recommendations are implied. It is outside the scope of this communication to consider whether it is suitable for you and your financial objectives.